Two times investments here. Today we're going to be covering how I caught over 230 pips on Euro USD. This play was sent out in my VIP chat, and as you can see, it went crazy. So today I'm going to show you how I trade the market. So beginning of the week, I saw this exact setup right here. So as you can see, we are on the uptrend, and for that I'm going to be taking buys. That's what I'm thinking in my head. We are taking only buys. So with the strategy, we mark the previous high that was broken through with the impulse, which will be that area right here, this area right in here. And that is because we got a new high, which lets us know that if it breaks out this key area again, we're going to head to that new high for sure. So we mark that high, and I make that green. So as we broke with the impulse, we corrected, came back, then break through, came back, then break through, came back down, then break through. Excuse me for the noise in the background. But we pulled back again. But also notice how this level is holding, which lets us know that price is still bullish. And we also have a trend line break here as well, which some may call a flag pattern. And if you are trading a flag pattern, you know that you can measure the first impulse of the, well, what you would call the pole of the flag, which will be this right here, which lets us know that price will go roughly at 380 pips. So measure from the low, and as you can see, price gave us 380 pips. If you go from the break right here, you'll see price gave you 380 pips. But we only called 230 because some of this is from this week, which is the last week trade. So it already hit our take profit 3. So usually I tell my clients and my members that if it hit take profit 3, if you're not still holding, just don't get back in, because it's going to keep going, and it's not going to give you another entry point to get back in. Which, as you can see, after we hit 230 pips, which is right here, the entry point, like, you can't really, it chopped after that. So this is going to be me explaining why I got in at the break and not at the break of the flag. So I didn't catch it at the break of the flag because the move happened before New York section, which, I mean, everybody was really asleep, so that move happened. And it also happened on a Friday, so we had to wait for next week to get back in. So as you can see right here, as we came to our impulse level, we got a double bottom right here, which gives us more confirmation that price is going to go up and reach our first take profit level, which is, we got in right here at the break. Our first take profit level is 45 pips, and then if we are, our take profit level for 230 pips is right around here. But right around in here. You zoom out. As you notice, we risk little to no drawdown. If you put your stop loss right in the area where it broke, which is 20 pips, 25 pips maybe. So you're risking 25 to catch 230. But if we would have caught that move that Friday right here, we could have risked 25 pips to catch 310. But that's why catching the move is so important before it happens. Staying with the trend. Never trade against the trend at all. Unless price starts to consolidate, which it is doing right here. So if any lows are not broken, you keep holding your trade. So as you see, we got in the trade here. Hit our first take profit. As you know, after every impulse, there is a correction. But we didn't break any lows, so our first take profit was hit. You can choose to stay in or get back in on the correction. Sometimes it doesn't correct as much, so you can still hold your trade and move your trail stop to the first take profit. Also, you can get in another trade and hold your other trade as well. So if you got in on this retracement, and get in on this retracement where it's breaking out again, you can hold. And as you can see, it took off. There were no retracements. Gave us a big impulse and kept going. And this is on the 2-hour chart. So this lets you know you are catching a very big swing trade. And for that, you can do this on any time frame. The higher the time frame, the longer the setup will take to occur. You can do this on lower time frames. So we're going 15 minutes. And we scroll all the way back. This is made. This is everywhere. We can do this part right here. Show you another example. Right here was the last lower high. Gave us an impulse. Just gave us a new high. So this is going to be our first take profit area. Came down. We didn't break above. Didn't break above. Then right here, we broke above. So our trade is going to be $35 pips, and we're going to be risking 5 pips, which is a 1-to-6 risk to reward ratio. So if you got in, it pulled back a little bit, but after that it took off and hit our first take profit. Now, how would you do your second take profit? You will measure the 35 pips and target that area as it passed the first take profit area, which is around this area right here. And as you can see, the second take profit area was hit as well, which is 70 pips off a 5 pip risk. So this strategy can be used on any time frame, any currency, any crypto, any time frame. It's effective for the sell side as well. If you're looking for any sell side examples, watch my first and second video on YouTube at 2x investments. And this is the strategy. Do not be too greedy. After your second and third take profit is hit, if it starts to consolidate, you know that price is more than likely done and has no momentum, or could be setting up a continuation pattern. So I will always say, when price starts to consolidate, get out of your trades and look to get back in more for another opportunity.